Based on the provided price history and forecast for Bitcoin, a bullish strategy appears to be the most suitable. Price history shows a clear upward trend, with several significant price increases interspersed with minor dips. The forecast further reinforces this bullish sentiment, projecting a consistent upward trajectory over the next week. Therefore, I recommend a long-term investment strategy. Given the current price of around $80, a suitable entry point would be $80. A stop-loss order should be placed at $78 to mitigate potential downside risk. The target price should be set at $85, aiming to capitalize on the projected price increase. This strategy allows for a measured approach, taking advantage of the bullish momentum while managing risk effectively. Given the price trends and forecast for Ethereum, a medium-term investment strategy appears promising. The historical prices demonstrate a consistent upward trajectory, with the current price hovering near its forecast and close to the support level of $3,203.4. The resistance is at $3,535.92, suggesting potential for further upward movement. Therefore, I recommend a long position in Ethereum. A suitable entry price would be $3,250. Slightly above the support level, allowing for some room for price fluctuation. The stop loss should be set at $3,150 to mitigate potential losses. The target price could be set at $3,500, aiming to capture a significant portion of the potential price increase towards a resistance level. This medium-term strategy allows for capitalizing on the upward trend while managing risk effectively. The historical price data for Ripple reveals a generally upward trend, although with some fluctuations. Forecast prices indicate continued upward momentum, suggesting a bullish outlook. Considering the support price and resistance price, we can identify a potential trading range. Based on this analysis, a long-term investment strategy in Ripple appears promising. The entry price could be around $0.5973, the support price, allowing for a potential price appreciation towards the resistance level of $0.6416. The stop loss should be set slightly below the entry price at $0.5900 to minimize risk. The target price could be set at $0.6400, aiming to capture a significant portion of the potential price increase. This strategy capitalizes on the anticipated upward trend while managing risk through a well-defined stop loss. Given the price history and forecast for Solana, a medium-term investment strategy appears most suitable. The historical data reveals an upward trend, with prices consistently increasing over the past few weeks. The forecast further supports this bullish outlook, projecting continued growth in the coming weeks. Therefore, a long position in Solana is recommended. An optimal entry price would be around $195, aligning with the current price and allowing for potential upside as the forecast suggests prices could reach $212 or higher. To manage risk, a stop-loss order should be placed at $185, providing a buffer against unexpected market reversals. Target price for this investment could be set at $220, aiming to capitalize on the projected price appreciation while offering a reasonable profit margin. Given the historical price data and the forecast for Cardano, a medium-term investment strategy appears to be the most suitable approach. The historical price shows a consistent upward trend, with recent fluctuations indicating potential consolidation before further growth. Forecast predicts continued upward movement, suggesting a bullish outlook for the medium term. Therefore, a long position is recommended. An entry price around $0.512, aligning with the first forecast price, would be ideal. A stop-loss order should be placed at $0.491, the recent low, to minimize potential losses. The target price should be set at $0.676, the highest predicted price in the forecast, allowing for significant profit potential if the bullish trend continues. This strategy capitalizes on the anticipated upward momentum while managing risk through a well-defined stop-loss order. Based on the provided information for Coin, a bullish investment strategy appears to be the most suitable approach. The historical price data reveals a clear upward trend, with the price consistently moving higher over the past 2 weeks. The forecast further supports this bullish outlook, predicting continued price growth over the next week. This suggests that Coin is in a strong upward momentum and has the potential for further gains. Considering this, an investment strategy focused on a long position appears to be the most promising. A suitable entry price would be around $2.70, slightly below the current price and close to the recent high of $2.73. To manage risk, a stop-loss order could be placed at $2.60, providing a cushion against potential price reversals. The target price should be set at $3.50, aligning with the upper end of the forecast range and representing a significant potential profit. This strategy allows for capitalizing on the bullish momentum of Coin, while implementing risk management measures to protect against potential losses. Given the price trends and forecast for Filecoin, an investment strategy focusing on a short-term approach seems most suitable. The historical prices show an upward trajectory, with the current price near its forecast and close to the support level of $4.164. The resistance is at $4.777, indicating potential for further upward movement. Therefore, a long position is advisable to capitalize on this potential price increase. An ideal entry price would be around $4.20, aligning with the forecast and allowing for some room to absorb potential volatility. The stop loss should be set slightly below the support level, at approximately $4.15, to protect against unexpected price drops. The target price could be set at $4.50, aiming to capture a significant portion of the potential upward movement before reaching the resistance level. This strategy allows for a relatively aggressive short-term play while mitigating risk with a well-defined stop loss. Based on the provided Theta network price data and forecast, a medium-term investment strategy appears most suitable. The historical prices demonstrate a clear upward trend, with recent fluctuations around the $1.20–$1.30 range. The forecast predicts further price increases, suggesting potential for capital appreciation. Therefore, a long position in Theta network is recommended. An entry price of $1.30 aligns with the current price and the forecast. The stop loss should be set at $1.25 to manage risk and protect against unexpected price drops. The target price can be set at $1.50, capitalizing on the forecast's upward trajectory and the historical resistance level. This strategy allows for potential profit from Theta network's anticipated price growth over the medium term, while mitigating risk with a defined stop loss. Given the historical price data and the 1-week forecast for Dogwifhat, an investment strategy focused on a medium-term approach appears promising. The historical prices show a fluctuating trend, but the overall direction is upward. The forecast suggests continued growth, with prices potentially reaching $3.15. Therefore, a long position is recommended to capitalize on this potential upward movement. A suitable entry price would be around $2.75, aligning with the recent price action and the support level of $2.834. To manage risk, a stop-loss order should be placed at $2.68, slightly below the current price and the lower end of the recent price range. The target price could be set at $3.10, aiming to capture a significant portion of the forecasted price increase. This strategy balances the potential for high returns with a reasonable level of risk, making it suitable for a medium-term investment horizon. Given the price trends and forecast for Stellar, a moderately aggressive investment strategy would focus on a medium-term approach to capitalize on the expected upward momentum. The historical prices show a consistent upward trajectory, with the current price near its forecast and close to the support level of $0.1109. The resistance is at $0.1275, indicating that there is still room for upward movement. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An entry price of $0.112 would allow you to buy in before the price reaches its resistance. while the stop loss at $0.108 protects your downside. The target price should be set at $0.125, allowing you to exit near the resistance level and lock in profits before a potential pullback. This strategy balances risk and reward, aiming for a moderate return over a medium-term horizon. Based on the provided price information for Starknet, a medium-term investment strategy appears most suitable. The historical price data shows a clear upward trend, with the price bouncing back from dips and reaching new highs. This suggests underlying bullish momentum. The forecast price further supports this view, indicating continued upward movement over the next week, while the support price of $0.4368 provides a safety net. The resistance level of $0.614 suggests a significant upside potential. Considering these factors, a long position on Starknet is recommended for a medium-term investment horizon. An ideal entry price would be around $0.457, slightly above the current price and close to the recent high. A stop-loss order should be placed at $0.4368, just below the support level, to limit potential downside risk. The target price could be set at $0.549, aiming to capture a portion of the forecasted upside movement and aligning with a previous high point. This strategy allows for capitalizing on the bullish momentum while managing risk effectively. Based on the provided price information for PENDLE, a bullish investment strategy appears promising. The historical price data reveals an upward trend, with recent fluctuations suggesting a consolidation phase. Forecast price indicates continued upward momentum, projecting a climb towards $5.81 over the coming week. This positive outlook, coupled with the support price at $5.85, suggests that PENDLE is poised for further growth. Therefore, a long position is recommended for a medium-term investment horizon. An entry price of $5.38, aligning with the current price and the lower end of the forecast range, provides a favorable entry point. To manage risk, a stop-loss order should be placed at $5.15, slightly below the recent lows and the initial support level. Target price can be set at $6.88. The resistance level, aiming to capitalize on the full potential of the upward trend. This strategy allows for a balanced approach, mitigating risk while maximizing the potential for returns. Given the price trends and forecast for render, an investment strategy focused on a short-term approach seems appropriate. The historical price data shows a consistent upward trajectory, with the current price close to its forecast and above its historical lows. The forecast suggests a continued upward movement, with the price potentially reaching $6.76 in the coming weeks. This indicates a bullish outlook in the short term, making a long position the most suitable strategy to capitalize on the anticipated price increase. For an aggressive short-term investment strategy, an entry price of $5.60 would be ideal, aligning with the current price and the forecasted upward momentum. The stop loss should be set at $5.40 to protect against any unexpected price reversal. The target price should be set at $6.70, allowing you to take profits before the market potentially reaches its resistance level, ensuring you lock in gains from the anticipated price increase. Given the price trends and forecast for VeChain, a medium-term investment strategy seems appropriate. The historical prices demonstrate a recent upward trend, with the price currently hovering near its forecast and support level. However, the resistance level suggests that further significant upward movement might be limited in the short term. A long position is advisable to capitalize on the potential for continued growth within this time frame. An entry price of $0.023 would allow you to buy in at a price point slightly below the current market value, offering a potential margin of safety. The stop loss should be set at $0.022, protecting your investment from significant downside risk. The target price should be set at $0.029, aligning with the forecast and allowing you to capture potential gains as the price approaches the resistance level. This strategy balances risk and reward, aiming to capitalize on the upward momentum of VeChain while mitigating potential losses. Based on the provided price information for Binance Coin, a bullish investment strategy appears suitable. The historical price data reveals an upward trend, with the recent price hovering near the support level of $620. $6.4. The forecast suggests a continued upward trajectory, with prices potentially reaching $702 within the next week. This indicates a strong potential for profit in the short to medium term. Therefore, a long position on Binance Coin is recommended. The entry price should be set at $628, slightly above the current support level, allowing for a small margin of safety. The stop loss should be placed at $626.4, precisely at the support level, to minimize potential losses. Target price can be set at $670, which represents a reasonable profit target based on the forecast and historical price movements. This strategy capitalizes on the bullish momentum of Binance Coin while managing risk effectively. Based on the provided price history and forecast for Conflux, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend, with recent price movements suggesting a potential upward trajectory. The forecast indicates continued growth, projecting prices to reach $0.174 within the next week. This suggests a bullish outlook for Conflux in the near term. Therefore, an investment strategy focusing on a long position is recommended. The entry price should be set at $0.16, aligning with the current price and providing a good entry point for potential upside. The stop loss should be placed at $0.1518, the support price, to minimize potential losses in case of a sudden price drop. The target price can be set at $0.1821, the resistance price, aiming to capitalize on the anticipated upward momentum and potential price appreciation. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses. Based on the provided price information for Worldcoin, a bullish investment strategy appears to be the most promising. The historical price data shows a clear upward trend, culminating in a recent surge to $2.5. The forecast price suggests continued growth, reaching $2.47 within the next week. This positive momentum, coupled with the support price of $2.347, indicates a strong foundation for further price appreciation. Therefore, I recommend a long position on Worldcoin with an entry price of $2.15, slightly below the current price to allow for a potential dip. The stop loss should be set at $2.0, providing a cushion against unexpected market reversals. The target price can be set at $2.55, aiming to capitalize on the projected price increase and potentially exceeding the recent high. This strategy capitalizes on the bullish sentiment and provides a reasonable risk-reward profile. Given the price trends and forecast for Avalanche, a moderately aggressive investment strategy would focus on a medium-term approach to capitalize on the anticipated upward momentum. The historical prices demonstrate a consistent upward trajectory, with the current price hovering near the lower end of the recent price range. The forecast suggests Avalanche could climb from its current levels towards $36, aligning with the support price of $2.64 and resistance at $40.0. This indicates a bullish outlook in the medium term, making a long position the most suitable strategy to capitalize on the potential for a price increase. For this medium-term investment strategy, an entry price of $32.80 would be ideal, allowing you to buy in slightly above the support level while still benefiting from the anticipated upward movement. The stop loss should be set at $32.00 to protect against any unexpected price reversals. The target price should be set at $36.00, aligning with the forecast and allowing you to take profits before the price potentially encounters resistance at $40.00. This strategy balances risk and reward, aiming to capitalize on the bullish momentum while mitigating potential losses. Based on the provided data for Jupiter, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows a fluctuating trend with periods of both upward and downward movement. The forecast price suggests a continued upward trajectory, reaching levels above the current resistance price. This indicates a potential for growth in the coming weeks. Therefore, a long position in Jupiter is recommended. A conservative entry price could be set at $1.2, slightly below the current price, allowing for a margin of safety. The stop loss should be placed at $1.05, aligning with the support price. To protect against significant price drops, the target price could be set at $1.31, based on the highest forecasted price, aiming to capture a substantial portion of the potential upside. This strategy balances risk and reward, capitalizing on the anticipated price increase while mitigating potential losses. Given the price trends and forecast for EOS, a medium-term investment strategy appears most suitable. The historical prices demonstrate an upward trajectory, with the recent price hovering near the support level of $0.5475. The forecast predicts a continued upward climb, reaching $0.607 within the next week. This suggests a bullish outlook for EOS in the medium term. Therefore, a long position is recommended to capitalize on this potential price increase. An entry price of $0.55, slightly above the current price and below the immediate resistance level, would be prudent. A stop-loss order should be placed at $0.5475, aligning with the support level, to minimize potential losses. The target price can be set at $0.60, aiming to capture a significant portion of the anticipated price appreciation before the market potentially reaches its resistance level of $0.6082. This strategy allows for a balanced approach, leveraging the positive forecast while mitigating risk. Based on the provided price history and forecast for TRON, a short-term investment strategy focusing on a long position appears to be the most suitable. The historical prices demonstrate a slight downward trend, but the forecast suggests a gradual upward movement. This indicates a potential opportunity to buy low and sell high within a short time frame. Therefore, an entry price of $0.163, a stop loss at $0.161, and a target price of $0.169 are recommended. This strategy allows you to capitalize on the anticipated price increase while minimizing potential losses. The stop loss protects your investment if the price unexpectedly drops below the $0.161 level. The target price is set at $0.169, aligning with the forecast and offering a reasonable profit margin. Based on the provided price data and forecast for SE, a short-term investment strategy appears to be the most promising. The historical price data reveals a fluctuating trend, but the recent price action suggests a potential upward movement. The forecast prices indicate a consistent increase over the next week, reaching as high as $0.507. This upward momentum, coupled with the current price hovering near the support level of $0.4938, presents a favorable entry point for a long position. To maximize potential returns within a short-term time frame, an entry price of $0.495 could be considered. A stop-loss order placed at $0.485 would help mitigate risk in case the price reverses direction unexpectedly. The target price should be set at $0.51, aiming to capture a portion of the forecasted price increase. This strategy capitalizes on the anticipated upward movement of SE, while implementing risk management measures to protect against potential losses. Given the price trends and forecast for Shiba Inu, a medium-term investment strategy focusing on a long position appears promising. The historical prices demonstrate a recent upward trend, with the current price hovering near the support level of $0.0000268. The forecast suggests a continued upward trajectory, with prices potentially reaching as high as $0.0000302 in the coming weeks. This indicates a bullish outlook in the medium term, making a long position the most suitable strategy to capitalize on the anticipated price increase. An aggressive medium-term investment strategy would involve entering a long position at the current price of $0.0000202. The stop loss should be set slightly below the support level at $0.0000268 to protect against a sudden price reversal. The target price should be set at $0.0000280, aligning with the resistance level and allowing for a healthy profit margin. This strategy allows you to ride the potential upward momentum of Shiba Inu while mitigating risk through a well-defined stop loss. Given the price trends and forecast for Dogwifhat, a medium term investment strategy appears to be the most suitable approach. The historical prices demonstrate a consistent upward trajectory, suggesting potential for continued growth. The forecast further strengthens this outlook, indicating a steady climb in price over the coming weeks. While the absence of specific support and resistance levels makes it difficult to pinpoint precise entry and exit points, the current price presents a favorable opportunity to enter a long position. An ideal entry price would be around $0.18, aligning with the recent price action and providing a margin of safety below the current market value. A stop-loss order could be placed at $0.165 to mitigate potential downside risk. The target price could be set at $0.3, based on the upward trajectory of the forecast, allowing for a substantial profit potential while managing risk effectively. This strategy capitalizes on the anticipated upward momentum of Dogecoin, aiming for a medium-term gain. Based on the provided data for Hooked Protocol, a short-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a downward trend over the past 2 weeks, and the forecast suggests this downward momentum may continue. The current price is hovering near the support level of $0.3856, indicating a potential for further decline. Therefore, an aggressive short-term investment strategy would involve taking a short position on Hooked Protocol. A suitable entry price would be $0.401, aligning with the current price and allowing for potential profit as the price moves towards the forecast lows. The stop loss should be placed at $0.412, slightly above the current price, to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.385, aiming to capture a portion of the anticipated downward movement while staying cautious of the support level. Based on the provided data for Aevo, a short-term investment strategy focusing on a long position appears to be the most suitable. The historical price data reveals an upward trend, with the price recently bouncing back from a low point. Forecast prices suggest continued upward momentum, reaching levels above the current price. Furthermore, the support price of $0.3917 provides a safety net, indicating that significant downside movement is unlikely in the near term. Therefore, I recommend entering a long position at the current market price, around $0.345. The stop loss should be set at $0.336, slightly below the recent low point, to minimize potential losses. The target price should be set at $0.3917, aligning with the support price and representing a reasonable profit target. This strategy capitalizes on the anticipated upward trend in Aevo, while also incorporating risk management measures to protect against potential market fluctuations. Based on the provided coin price history and forecast, a medium-term investment strategy appears most suitable. The price history demonstrates a recent period of consolidation after a significant upward move, with the current price hovering around the support level. The forecast suggests a potential upward trend over the next few weeks, indicating a possible continuation of the bullish momentum. Therefore, an investment strategy involving a long position in coin is recommended. The entry price should be around $0.00755, aligning with the current support level. A stop-loss order should be placed at $0.00734, slightly below the recent lows and the first predicted price point in the forecast. The target price could be set at $0.0084339, the resistance level, aiming to capitalize on the potential upward movement. This strategy allows for participation in the potential upside while mitigating risk through a well-defined stop-loss order. Sun Coin shows a fluctuating price trend over the past 2 weeks. While the price has experienced dips, it has also shown resilience, bouncing back above the support level. The forecast suggests a slight upward momentum in the coming week. Considering the price history, the current price near the support level, and the positive forecast, a long-term investment strategy appears to be more suitable. Therefore, I recommend entering a long position at the current price of around $0.0186. The stop loss should be placed below the recent support level at approximately $0.0181 to minimize potential losses. The target price can be set at $0.0201, aligning with the highest forecast price, allowing for potential profit gains as the price potentially rises. This strategy aims to capitalize on the anticipated upward trend while managing risk effectively. Given the provided price data and forecast for PEEP, a short-term investment strategy appears most suitable. The historical prices show a general upward trend, with the recent price hovering near the support level. Forecast indicates continued upward movement, suggesting a potential for short-term gains. Therefore, an aggressive investment strategy would involve taking a long position on PEEP. A suitable entry price would be around $0.000110, aligning with the current price and the forecast. The stop loss should be placed slightly below the entry price at approximately $0.000017 to minimize potential losses. The target price could be set at $0.000124, a level slightly above the highest forecasted price, allowing for profit taking before a potential price correction. Based on the provided information for TRON coin, a short-term investment strategy appears most suitable. The 2-week price change shows a general upward trend, but the forecast indicates a slight pullback in the near future. This suggests a potential opportunity to buy low and sell high within a short time frame. A long position could be considered with an entry price around $5.20, aligning with the current price and the support level. The stop loss should be set at $5.15 to minimize potential losses. The target price could be set at $5.55, aiming to capitalize on the projected upward movement towards the resistance level. This strategy capitalizes on the short-term bullish momentum, while mitigating risk with a well-defined stop loss. Based on the provided price information for Bitcoin Cash, a bullish investment strategy appears promising. The historical price data reveals a consistent upward trend, with prices recently surging above $440. The forecast predicts continued growth, reaching $493 within the next week. This positive momentum, coupled with the support price at $377.0 and the resistance at $496.1, suggests a favorable environment for long-term investment. Therefore, I recommend a long position in Bitcoin Cash with an entry price around $445, aligning with the recent price action and the forecast. A stop-loss order should be placed at $420 to protect against potential retracements, while the target price can be set at $490, aiming to capitalize on the predicted upward movement. This strategy targets a medium-term investment horizon, allowing for potential growth while managing risk. Based on the provided data for Chainlink, a medium-term investment strategy appears to be the most suitable approach. The historical price data reveals a fluctuating trend with a slight upward bias, while the forecast indicates continued growth over the next week. The support price at $14.394 and the resistance price at $15.928 suggest a range-bound market in the near term. Therefore, a long position is recommended, aiming to capitalize on the potential upward movement towards the resistance level. The entry price should be set at $14.50, slightly above the current price and the support level, allowing for a buffer against immediate price fluctuations. The stop loss should be placed at $14.30 to limit potential losses if the price drops below the support. The target price can be set at $15.70, a conservative target that aligns with the resistance level and allows for a reasonable profit margin. This strategy balances risk and reward, capitalizing on the positive forecast while mitigating potential downsides. Polkadot presents an opportunity for a long-term investment strategy. The historical price data reveals a consistent upward trend, with recent price increases reaching $5.7, while the forecast predicts continued growth, reaching $5.91 in the coming weeks. The current price sits comfortably above the support level of $4.82. This suggests a strong underlying bullish sentiment. Therefore, a long position in Polkadot is recommended for a medium to long-term investment horizon. The entry price should be around $5.2, aligning with the recent price highs and allowing for a potential pullback before entering the position. The stop loss should be set at $4.9, slightly below the support level, to minimize risk. The target price should be set at $6.5, which represents a significant upside potential based on the historical price action and the forecast, allowing for substantial profits if the bullish trend continues. Based on the provided data for Near Protocol, a medium-term investment strategy appears most suitable. The historical price data reveals a volatile trend with periods of both upward and downward movement. The recent price surge indicates bullish momentum, supported by the forecast predicting continued growth over the next week. However, the resistance level at $6.34 suggests potential for a pullback before a further upward push. Therefore, a long position is recommended for this medium-term strategy. An entry price around $4.80 aligns with the current price and the forecast, allowing for potential upside. The stop loss should be set at $4.60 to limit potential losses in case of a sudden price drop. The target price can be set at $5.50, capitalizing on the anticipated price increase towards the resistance level. This strategy allows for capturing potential gains while mitigating risk through a well-defined stop loss. Given the price trends and forecast for stacks, a medium-term investment strategy appears to be the most suitable. The historical prices show a general upward trend, but with some recent volatility. The forecast suggests continued upward momentum, with prices potentially reaching $2.15 in the coming weeks. This indicates a bullish outlook in the medium term. Therefore, a long position is advisable to capitalize on the potential for a price increase. An ideal entry price would be around $1.85, aligning with the forecast and allowing for some room for price fluctuation. The stop loss should be set at $1.76, slightly below the recent lows, to protect against any unexpected price drops. The target price should be set at $2.10, slightly below the forecast high, allowing you to take profits before the market potentially experiences a pullback. This strategy balances risk and reward, aiming to capitalize on the positive price momentum while mitigating potential losses. Given the historical price trends and the provided forecast for Aptos, a medium-term investment strategy appears to be the most suitable approach. The Aptos price has shown a consistent upward movement over the past 2 weeks, with the forecast indicating continued growth in the coming weeks. While the price is currently near its support level, the forecast suggests a strong potential for price appreciation. Therefore, a long position is recommended for this strategy. An entry price of $10.38 aligns with the support level, offering a potential buying opportunity. The stop loss should be placed at $9.84, slightly below the recent lows, to minimize potential losses. The target price should be set at $12.00 based on the forecast, allowing for a reasonable profit margin. This medium-term strategy aims to capitalize on the anticipated upward momentum of Aptos while managing risk effectively. Given the historical price data and the provided forecast for Litecoin, an investment strategy focusing on a long-term approach appears to be the most prudent option. The historical prices demonstrate a clear upward trend, suggesting an underlying bullish sentiment. The forecast further reinforces this positive outlook, projecting continued price appreciation over the coming weeks. Therefore, a long position in Litecoin is recommended. A conservative entry price could be set at $76, aligning with the support price and the first predicted price point in the forecast. A stop loss order should be placed at $73, below the recent historical lows, to minimize potential losses. Target price could be set at $85, aiming to capture a significant portion of the projected price increase and nearing the resistance level. This strategy capitalizes on the positive price momentum while incorporating risk management measures to protect against potential market fluctuations. Given the price trends and forecast for Uniswap, a moderately aggressive investment strategy would focus on a short-term approach to capitalize on the anticipated upward momentum. The historical prices show a consistent upward trajectory, with the current price close to its forecast and near the support level. The resistance is at $9.318, indicating that there is still some room for upward movement. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. For this strategy, an entry price of $9.00 would allow you to buy in near the current price and capitalize on the upward trend. The stop loss should be set at $8.85 to protect against any unexpected price decline. The target price should be set at $9.30, slightly below the resistance level, allowing you to take profits before a potential pullback. This strategy aims to capture a portion of the anticipated price increase while managing risk effectively. Given the historical price data and the provided forecast for Bittensor, an aggressive investment strategy would favor a long-term approach. The historical price shows a consistent upward trend, with recent dips being met with buying pressure, suggesting strong underlying support. Forecast predicts continued upward movement, with prices reaching above the current resistance level. This indicates a bullish outlook for Bittensor in the medium to long term. To capitalize on this potential, a long position would be advisable. An entry price around $525, slightly above the recent support level and close to the historical high, would allow for a good risk-reward ratio. The stop loss should be placed at $510, below the recent consolidation range, to protect against unexpected price reversals. The target price should be set at $604, aligning with the highest point of the historical data and the forecast price, allowing for significant profit potential if the bullish trend continues. Given the provided price history and forecast for Internet Computer, a medium-term investment strategy appears most suitable. The historical price data shows a fluctuating trend with recent upward movement, suggesting potential for continued growth. The forecast predicts further price increases over the next week, reaching a peak around $9.49. This upward momentum, coupled with the current price hovering near the support level of $8.345, indicates a favorable entry point for a long position. Therefore, an investment strategy for Internet Computer should involve entering a long position at around $8.50, aligning with the forecast and allowing for a margin of safety above the support level. The stop loss should be set at $8.35 to minimize potential losses if the price drops below the support. The target price should be set at $9.45, aiming to capture a significant portion of the forecasted price increase while leaving room for potential price fluctuations. This strategy balances risk and reward, allowing for potential gains in the medium term while mitigating potential losses. Given the price trends and forecast for Artificial Superintelligence Alliance, a medium-term investment strategy appears most suitable. The historical prices show an upward trend, with a recent pullback. The forecast suggests continued upward momentum, with prices potentially reaching $1.57. The support price at $1.524 provides a safety net, while the resistance at $1.68 indicates a potential ceiling for the near term. Therefore, a long position is recommended. The entry price should be around $1.45, aligning with the current price and the forecast. The stop loss should be placed at $1.42, slightly below the recent low and the support level, to minimize potential losses. The target price should be set at $1.57, aligning with the highest forecast price, allowing for a reasonable profit margin. This strategy capitalizes on the anticipated upward price movement while managing risk effectively. Based on the historical price and forecast data for Optimism, a short-term investment strategy with a long position appears to be the most suitable approach. The historical price data shows a consistent upward trend, with the current price hovering near its forecast and support level. The forecast suggests a further increase in price, with the potential to reach the resistance level. Therefore, entering a long position at a strategically chosen entry price would allow investors to capitalize on this anticipated price appreciation. To implement this strategy effectively, a conservative entry price of $1.61 could be considered. This price point aligns with the current market value and allows for potential profit if the price rises towards the forecast and resistance levels. A stop loss order should be placed at $1.52 to minimize potential losses in case the price unexpectedly drops. Target price could be set at $1.82, which represents a significant upside potential while remaining within a reasonable range based on the forecast. Given the 2-week price history of Ethereum Classic and its 1-week forecast, a medium-term investment strategy appears to be the most suitable approach. Price has shown a consistent upward trend over the past 2 weeks, reaching a recent high of $24. This positive momentum is further supported by the forecast, which predicts continued growth over the next week, with prices potentially reaching $27. This suggests a bullish outlook for Ethereum Classic in the short to medium term. Therefore, a long position is recommended for Ethereum Classic. An entry price of $24 would allow you to buy in near the current market price while benefiting from the anticipated price increase. Setting a stop loss at $23 $3 would protect against potential price reversals, while a target price of $27 would allow you to capture a significant portion of the expected gains. This strategy balances risk and reward, aiming to capitalize on the bullish momentum of Ethereum Classic, while minimizing potential losses. Given the price trends and forecast for Ethereum name service, a short-term investment strategy appears promising. The historical prices show a consistent upward trajectory, with the current price hovering near the support level of $19.11. The forecast indicates further price increases, suggesting a bullish outlook in the short term. Therefore, a long position is advisable to capitalize on this potential price increase. An entry price of $19.50 would allow you to buy in at a relatively attractive price point, while a stop loss at $18.50 would protect your downside. The target price could be set at $21.50, aiming to capture a significant portion of the potential upside before the price reaches the resistance level of $25.67. Given the historical price data and the one-week forecast for Solana name service, a cautious medium-term investment strategy is recommended. The historical price shows a downward trend over the past 2 weeks, with the forecast suggesting further declines. However, the support price of $0.2423 indicates a potential floor for the price. This suggests a period of consolidation or sideways movement before a potential rebound. Therefore, a long position is advisable for a medium-term investment strategy. An entry price of $0.235 could be considered, slightly below the current price and the forecasted lowest price, allowing for a margin of safety. The stop loss should be placed at $0.225, below the recent lows, to limit potential losses. The target price could be set at $0.255, aiming for a potential price increase towards the resistance level. This strategy allows for a moderate risk-reward profile, capitalizing on a potential rebound while mitigating potential downside risks. Given the price trends and forecast for Aave, a short-term investment strategy appears promising. The historical price data shows a fluctuating trend with a recent upward surge. Forecast indicates continued upward movement, suggesting a potential rally in the near term. The support price at $174.05 provides a safety net, while the resistance at $194.46 presents a potential profit target. Therefore, an aggressive short-term strategy would involve a long position on Aave. A suitable entry price would be around $180, considering the current price and the forecast. The stop loss could be set at $175 to minimize potential losses if the price unexpectedly drops. Target price should be set at $192, aiming to capture a significant portion of the anticipated price increase. This strategy allows for potential profit within a short time frame while mitigating risk through a well-defined stop loss. Based on the provided Injective price data and forecast, an aggressive short-term investment strategy suggests a long position. The historical price shows a consistent upward trend, with the current price hovering near the support level of $26.2. Forecast indicates continued upward movement, reaching $27 in the coming week. This suggests that Injective is likely to experience further price appreciation. Therefore, a long position is recommended to capitalize on this potential. An entry price of $26.5 would allow you to buy in near the current market price while providing a buffer against immediate price fluctuations. The stop loss should be set at $26.0 to minimize potential losses if the price unexpectedly drops. The target price could be set at $27.5, aiming to capture the majority of the forecasted price increase. This strategy aligns with the bullish price trends and forecast, aiming to profit from Injective's potential short-term growth. Based on the provided Polygon price data, a medium-term investment strategy appears most suitable. The historical prices show a general upward trend, with recent fluctuations suggesting a consolidation phase. While the forecast predicts continued upward movement, it's not aggressive enough to warrant a purely short-term approach. Therefore, a long position is recommended, aiming to capitalize on the expected price appreciation. An entry price around $0.330 could be considered, allowing for a small buffer below the recent price action. A stop loss at $0.315 would protect against unexpected downturns. while a target price of $0.430 aims to capture a significant portion of the anticipated price increase. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses in the medium term.